Good morning. Last time we talked about balance of payments and national account. Now we are going to complete the other two accounts, which are government account and monetary survey. First, let's start with government account. Government account shows all government transactions. It refers to the process of recording and management of all financial transactions incurred by the government, which includes its income and expenditure. So government account is a summary of all the transactions made by the governmental sector or the public sector, whether through purchase of goods and services or selling of or providing goods and services. This is a government account. It consists mainly of two main parts: total revenues and grants, and total expenditure and net lending. And then we are going to use both of them in order to identify whether we have a surplus or shortage, whether the government witnessed a deficit or a surplus, and then how to finance this surplus or deficit. So mainly it is two main parts: revenue, expenditure. Then we are going to add them together in order to find whether we have surplus or deficit, then how to finance this surplus or deficit. We are going to talk about each one of them in details. We can divide government account to total revenue and grants, and this includes total revenues collected from current revenue or capital revenue, and total grants. The second part is related to expenditure and net lending, and it consists of current expenditure, capital expenditure, and net lending. And finally, the third one, which is how to finance, it's related to net foreign borrowing and net domestic borrowing, as you can finance the deficit or surplus through borrowing domestically or from abroad. Total revenue and grants. Revenue include revenues collected from both current and capital revenues. Current revenues is related to tax and non-tax revenue, such as fees and fines, while capital revenue is related to fixed assets. If the government is going to invest in fixed asset and get the money back, they are going to sell a fixed asset. They are going to sell Omar Fandi. So this revenue is capital revenue. Grants. Grants are funds received by the government, and they do not have to repay it back. And finally, annex budget. Annex budget is related to special agency. It's a part of the government budget, but it's related to special agents such as higher education. Higher education is an agency that has its own budget, but it's a part of the overall budget of the government. So it can be written as annex budget, separated from the budget of the government itself. The second part is total expenditure and net lending. Also, it includes current expenditure and capital expenditure. Current expenditure includes the spending on wages, salaries, interest payments, subsidies, and the transfers. So the summation of spending on these four components is the current expenditure. What about capital expenditure? Capital expenditure is related to spending on assets, whether fixed assets or intangible assets. The government is going to buy bonds. The government is going to buy lands. Any non-military equipment that will be used for more than 1 year, it's also a capital expenditure. Number 3, net lending. Net lending, the government is going to lend money to other levels of government or other institutions and so on. So the summation of current expenditure, capital expenditure and net lending is total expenditure and net lending. Now we would like to find whether there is a surplus or a shortage in the government budget. In order to calculate whether there is a surplus or shortage, we have to add adjustment to cash basis, which is related to changes in arrears. In balance of payment, we define the changes in arrears as the interest rate on loans. The government would like to take loan from another country and have to pay interest on this loan. This is arrears. So a change in arrears measured by the difference between payments made and payments during a specific period of time. Okay, so in order to identify whether we have a surplus or shortage, we are going to subtract total expenditure from total revenue and then add the adjustment to cash basis. If it is positive, so there is a surplus in the government budget. If it is negative, so there is a deficit in government budget. Now we would like to finance the surplus or deficit. Finance means that you would like to obtain money or use the excess money, if there is an excess money, in any other transaction. Finance can be through net foreign borrowing or net domestic borrowing. If you are going to borrow from abroad, whether international organizations, banks, suppliers, foreign government, or you can borrow domestically from other organizations or from banks. So we can divide net domestic borrowing to two main parts: banks borrowing and non-banks borrowing. Banks borrowing, the government is going to borrow from the central bank and depository money markets, while non-bank borrowing, the government is going to borrow from the public through issuance of bonds or treasury bills. The summation of bank and non-bank borrowing is net domestic borrowing. So if you would like to find all sources of finance, it is the summation of net foreign borrowing and net domestic borrowing. This is with respect to government budget or government accounts. The last account is monetary survey. Monetary survey is a balance sheet of the monetary authority or the central bank and the deposit money banks. So it is related to the monetary system in the country. This is the shape of the monetary survey. It consists mainly from assets or total assets and credits and liabilities. Like any balance sheet, total assets should be equal to total liability and should be equal to, in this case, net domestic credits. So from this account, if you have net domestic credit, you can find total assets and total liabilities as well. Okay, net domestic credit. Net domestic credit means all outstanding claims by the bank to the government. It consists of claims on government, public corporations, private sector, other financial institutions. Okay, so this is net domestic credit. Other items net, it is a residual. The residual means the remaining part. It's mainly related to errors. Total assets is the summation of domestic assets and foreign assets. So total asset is the summation of net domestic asset and net foreign assets. The liabilities of the monetary authority is the money. Money in the hand of the public, or known as currency in circulation by its narrowest definition, is a liability to the monetary authority. So we can divide liabilities into money and the quasi-money. Money includes currency outside banks or currency in the hand of the public, demand deposits, or known as current account deposits, and with respect to quasi-money are anything that can be converted into money quickly, such as bonds. So if you are going to add currency outside banks, demand deposits, and the quasi-money, this is known as money and the quasi-money. And this is equivalent to total liabilities. This is total liabilities, money and the quasi-money, total assets, and net domestic credit. All of them are equivalent to each other. Okay. And finally, end of period exchange rate, and this is the exchange rate at the end of the year. That will be used in the calculation of anything to be converted from dollars to pound and vice versa. This is the end of our lecture today, and from next week we are going to start to work on the 4 accounts together and fill in the missing spaces of the 4 accounts with each other. Thank you.